Hello, good morning and welcome to ET Now's very own The Newspaper Show. For the next half hour, we'll be walking you through all the major headlines from the Times of India and the Economic Times. But before we do that and go any further, as our statutory warning, let me remind you that the newspapers are completely safe. And any rumors you may have heard regarding newspapers being a possible source of contamination for the COVID-19 virus are completely not true. All the personnel at the presses are using the utmost safety measures, PPE, and taking the highest care. So if you are interested in getting your newspaper delivered to your residence once again, please go to wantmypaper.com. I repeat again, wantmypaper.com, where you can explore all the options available for the same. With that being said, we're now ready to move on. Let's get you the top 10 stories for this morning, beginning with the fact that China has started pulling out troops in Ladakh. So that's a major positive one for us this morning. IT companies want permanent work from home relaxations. RBI checks Rupee's forward march. Payment holiday seekers down nearly 30%. Ventilator companies want exports ban to go. Short-term hurdles for Tata Consumer, says N Chandra. High Court tells Emami to give 7-day notice to HUL. Maharashtra allows hotels to reopen from July 8th. Sequoia closes $1.35 billion India fund. An early action flattened COVID curve, that's an MOF report. Those were the top 10 stories for this morning. We're now going to segregate them for you, corporate versus market. And the corporate entities, L&T rejigs board roles as Director Roy retires. Delaporte logs in at Wipro with a growth note. Returning to path of high fiscal discipline, says M&M. Adani to buy Kalpataru Power's 1,286 crore asset. And co-living companies explore revenue share pacts. All right, market headlines coming your way. Markets rally for the fourth session in a row. Retail investors help mid-caps outdo blue chips. HDFC MF may extend maturity of closed-end fund. Franklin gets HC nod to sell SL pledged shares. Finally, Rosari Biotech to launch an IPO. So those were the headlines, and now I think we'll begin with our individual researchers coming on board for their specific sectors. So the first one we'd like to bring to your attention this morning, India's top IT services companies are seeking permanence for relaxations in certain key norms, which has allowed the industry to move lakhs of employees to a remote working model in March, when the government imposed a lockdown to stem the spread of the COVID-19. So my colleague Chandra is now joining us. Good morning, Chandra. Welcome to the show. Is something like this likely for IT firms to give out to their employees? And what are the various factors that need to be considered before making such an allowance?
Hi, Darwin. Good morning. So if you look at what's been happening, most of the IT companies still have a majority of their employees working from home. People thought the number of people who would work from office will go up. But companies we've been speaking to say that with the virus numbers peaking, some cities seeing a recurrence, employees prefer to work from home for safety reasons. That's the reason why companies like TCS, HCL, Wipro, Cognizant, WNS, Genpact, and Infosys, which has units operating from special economic zones as well as STPI, they are seeking regulatory clarity in order to optimize their operations and move to a blended model with workers operating both from home and office. So the relaxation that the government has given now is temporary, but they want this to be permanent because they estimate that they may not need up to 30 to 50% of the real estate that they currently operate. Remember, these companies have massive campuses across the country. So it will be interesting to see the domino effect that this could have if they move permanently to a work-from-home blended model, if they reduce dependence on campuses, what impact is it going to have on the real estate costs in many of these cities, which were driven by these IT companies. So we'll have to wait and see how the government responds. For now, they have received their representation and is under consideration. Back to you.
Thanks for that, Chandra. Definitely some cities like Bangalore are very IT dependent. But just thinking about it, I feel this issue might creep up in every sector where there is being excessive real estate used right now for whatever the purpose may be. But thanks again for joining in, and it'll be interesting to see what finally happens as far as these IT companies go. Let's switch gears a little bit. SBI readies a 1K crore back-to-back. So Times of India business page 11 is where you'll find this story. SBI is set to invest Rupee 750 to 1,000 crore and leverage its YONO platform to set up a B2B e-commerce marketplace for MSMEs. The country's largest lender hopes this will also help it better manage financing of small businesses. So the key things to look out for here would be the fact that they're readying a 1,000 crore fund that's B2B only for MSMEs. They are planning to invest another $150 million in the YONO platform specifically. This will create an e-commerce marketplace essentially for MSMEs, and this will also help better management at the smaller company level of finances specifically. So that's an interesting one for SBI, and do keep a lookout for that counter this morning. Let's now turn to the Economic Times page 4. And according to the Economic Times report, PwC is set to announce promotions, compensation revisions, and bonus payouts for employees on October 1st. Executive Director, promotions and partner admissions will be announced soon and will be effective from January 1st. Reports suggest that the company informed the employees that performance bonus payout will be lower than the previous years, and also said that this financial year, the external environment will continue to be challenging. Our clients' businesses will continue to be impacted, and we will see stress in the market. So there's one of the leading firms in their field in the country coming forward, paying out bonuses to some degree, but definitely going to see some tapering off from last year's levels. Okay. Let's now turn to page 5 of the Economic Times, where we're going to be examining what's happening at Bajaj Auto a little bit. And it seems that production of Bajaj Auto and Skoda Auto, Volkswagen India factories in Aurangabad are likely to be impacted temporarily, with the district administration announcing a week-long lockdown from the 10th of July to check the spread of the COVID-19 in the region. So I'm assuming this means a full-blown lockdown again, like what we saw earlier in the year, otherwise it wouldn't be worth mentioning. The decision to reimpose the lockdown in the central Maharashtra district was taken on Monday after a meeting between government authorities and public representatives. So Bajaj and Skoda are the two factories that you need to look out for, that they may be suspending operations for up to a week or 10 days. Currently at the Bajaj Auto plant, 400 people have been impacted with the COVID virus, so that's quite a large number. And like I said, it's going to begin from the 10th of July. And unfortunately for the workers, this is possibly the most negative thing. They have to forego half of the wages during this lockdown, so they're going to be getting less money. And we all know that the bottom of the food chain or bottom of the pyramid, whatever you want to call it, is the place which needs the most support right now. So do keep an eye out for that. And I know Rajiv Bajaj also spoke to ET Now yesterday regarding the same issue. Let's now move forward. We're going to be looking at moratorium a little bit. Poonam's with us. Good morning, Poonam. Welcome to the show. Borrowers availing of the repayment holiday dropped to less than 30% at banks and non-bank lenders after financiers have advised them not to use the moratorium for a period longer than absolutely necessary. This is obviously because of the extremely high interest cost that is associated with moratorium. The cost of your loans shoots up significantly. But Poonam, why don't you walk us through the nitty-gritties of this one?
Well, the number of customers seeking moratorium in the system has certainly come down as the lenders have now opted to educate the customers in terms of the advantages and disadvantages of the moratorium and also have given them an opt-in strategy rather than a default option to go for a moratorium. In fact, Bandhan Bank, Bajaj Finance, IIFL, Indiabulls Housing Finance and Equitas, these are the lenders who have stated that the level of moratorium has come down for the respective lenders. Bandhan Bank in their latest update yesterday mentioned that the loans under moratorium have fallen to 30% and the collections have improved to 70%. Bajaj Finance also mentioned that the loans under moratorium have fallen to 15% versus 27% earlier. IIFL's chairman Nirmal Jain also mentioned that for them, the loans under moratorium now stand at 20% versus 35%. Indiabulls Housing Finance, Mr. Huda also mentioned that from the peak of 35% of loans under moratorium, that has certainly declined, and in fact the collections are now standing at nearly around 60% of the pre-COVID level. Equitas also mentioned that the moratorium for them now stands at 50% at the end of June versus 93% earlier. Within the MFI business, for them the loans under moratorium are somewhere around 42%, and for the MFI business the loans under moratorium have fallen to 56%.
It's great to know that people are paying up and that the NPA worries may have been slightly overstated when the moratorium first began. So quite interesting to see, very heartening to know. Let's now switch gears towards the F&B segment. Further easing the coronavirus-induced lockdown, the Maharashtra government allowed hotels and other entities providing accommodation services outside containment zones to resume operations at 33% of their capacity from tomorrow. So for any layman, if you have a 100-room hotel, you'll be allowed to lease out 33 rooms only. Hotels, restaurants to reopen outside containment areas as well. So restaurants are also included here. Bar on gatherings, guests at 33% capacity. So that's the threshold. SOPs on contactless payments for check-in and check-out. So there will be minimal contact. And masks, Arogya Setu app must be there if you want to enter the premises. So these are all the new essentials that we need if we plan on visiting a hotel or a restaurant. Let's now switch gears to Tata Consumer a little bit. That stock's been in focus on the back of some really strong numbers, the board mean commentary, lots of triggers over there. Tata Consumer's top boss N Chandra says the situation is improving for the company, but COVID may impact the business for a while. Talking about the Starbucks franchise, he says due to the pandemic, operations in Q4 were adversely impacted because of the closure of stores during the period of lockdown. In the short term, store reopening and ramp up will depend on the pace at which normalcy is restored in the economy and the return of consumer confidence. So Starbucks, we all know what it is. Granted, till we're all out and about again trying to get our cups of coffee, they're going to be facing some pressure in terms of how many customers they can really get. So some commentary coming on from the top bosses there. Do keep an eye out for that counter as we move forward as well. With that, I believe we might have now come to the end of all our individual stories. Let's walk you through the top 5 from the Times of India, which we haven't done this morning. Beginning with, after hotels, Maharashtra restaurants too can open. So there's some clarification. National toll has now crossed 20,000 cases for the 5th day in a row. Odisha, Punjab and Goa are the new COVID hotspots. Positivity rate at 6.73%. Tests cross the 1 crore mark. And Mumbai gets 60% of July rain quota in just 6 days. We've definitely been having some strong showers here, so that shouldn't really come as a surprise to anyone. With that, let's quickly, I think, also get you an interesting bite.